In February, the European Commission predicted the EU would, quote, narrowly avoid a recession. However, households would face difficult times ahead as cost of living pressures slowly ease. And this comes as the 27 countries of the EU are forecast to see growth of 0.8% in 2023. That's compared to a prediction from last fall that it would grow 0.3%. I don't know exactly what that means, but you're in luck because we have Paul Hannon here. He is a reporter for the Wall Street Journal. And Paul, you are going to explain those numbers for us. Currently, what does the recent European Commission outlook say about the overall economic health of the European Union?
Good morning, Emery. I'll try. So what they're saying is that things are looking a little bit more positive than they were at the end of last year. And that's because of changes basically in energy prices. Towards the end of last year, households here were getting hit by big increases in energy bills. And over recent months, energy prices have sort of eased. The weather was milder than usual. And also there was a lot of LNG coming from the US, amongst other places. American LNG suppliers sort of came to Europe's rescue. So that means that European households are spending less money on just heating their homes and getting by, and have a little bit more money to spend on, going out, having a good time, that kind of thing. It's not like the whole situation has been transformed. I mean, this is still a pretty weak year by historic standards. 0.8 is not an awful lot to hold a party about.
As you know, central banks around the world often look to the U.S. Central Bank to determine how to move forward. Jerome Powell spoke yesterday. He suggested that the Fed could sort of be more aggressive with interest rate hikes because there's been some positive news about the economy here. But it's not the same in the U.S., obviously. Is there any talk of interest rate hikes or anything along those lines there?
Yeah, there are actually. And, even though there are differences between the US and Europe, I mean, Europe's prospects, I have to say, are a bit weaker. The inflation problem is still a big deal here. And recent figures, pretty much as in the US, sort of suggest it isn't going away anytime soon. So we've been expecting a 50 basis point rate hike next week, basically, from the European Central Bank. And that's the kind of increase that Chair Powell was speaking about yesterday. Now, the ECB started later than the Fed. The Fed has done more. It's already gone further. But yeah, they're not exactly signaling a slowdown here. And as you mentioned, I mean, the fact that the Fed may pick up pace again means that that's actually less likely because, if the dollar appreciates, the gains against the euro, things that are denominated in dollars like energy imports become more expensive and, fuel inflation again. So they kind of have to keep an eye on what the Fed is doing. Not exactly match it, but not let it get too far ahead.
And the other thing Jerome Powell said was basically it's going to get uncomfortable. Everyone would like a soft landing without a recession, but there are, ongoing fears of a recession. So now I turn to well, how does this impact me sort of question, right? If there is a recession in the EU, what could the impact be globally?
Well, the EU is a pretty big economy, right? And, it buys a lot of things from elsewhere. I mean, most of the movies, for example, that people go to see in the US, in Europe, are made in the US. So already in the final sort of 3 months of last year, what the EU was buying from the rest of the world fell very, very sharply. Consumer spending generally did. So, if you're an American business that's, depending on EU consumers for some of your sales, then that's going to, pressure you. But I think generally Americans are pretty insulated from what happens over here. It's an important market, but mostly what matters in the U.S. is what happens in the U.S.
Very good. Paul Hannon, thank you very much.
Take care.